know regarding the interest rates have ticked up a little bit. So this is Talking Real Estate with Champions Real Estate Team here at Berkshire Hathaway Home Services Ambassador Real Estate Company. My name is Mark Wayne II. Team leader here. Joining me today is Russ Williams. So we always get a rundown what's going on in the real estate market over the last 7 days. Quick tip today. I'll try to keep it short and sweet as best I can. I'm talking about house hacking. So you may have heard something about house hacking if you're kind of in the real estate world on the investing side because your if I can talk, your biggest expense, typically monthly expense, is your housing, where you're living. And what they mean by house hacking is if you have a house and you're able to have roommates that come in, and basically if they can kind of lower your monthly housing expense, you can, pocket that monthly expense, that extra income, and build up to buying potentially another investment property or growing that portfolio and building that generational wealth. So that's one thing that start thinking about how housing can help improve your financial prowess out there and things of that sort of how you were able to generate. Because most people think I'm going to buy a house, I'm going to live in it, pay it off 30 years, and they're not thinking about the next step potentially of getting into that real estate investing. So one thing to think about is house hacking if you have the ability to do it. Maybe you're young, just out of college, you can get some roommates, you're able to get your foot in the door and get into a house, and they can help subsidize some of your housing expenses in there. So that's kind of what I got for our quick tips. So if you want more information, like I could probably do a whole video on just house hacking and the real estate investing side of it. But like I said, we try to keep it short and sweet here. So let's jump into let's take a look at the numbers as we go through here. Let me pull, that was already there. All right. So as we look here, we had 626 new listings, which was down from about 794, 720, 794, I think was last week. So we're down on the new listings that came onto the market. And then we had our new contracts written. I think that was at like 430 something, I believe it was last week. And now we're at 494. So our inventory came down a little bit. Our buyer activity went up a little bit. And that's even as Russ will get in here in just a minute about what the interest rates are doing. The buyers are still out there. The houses that are coming on, it's basically that typical spring market going into summer. We're coming into the, this type of the time period. We're seeing a lot of graduation parties, weddings. There's a lot of events I feel going on the weekend. So that kind of hinders a little bit. But those buyers that are, trudging forward are still able to find those houses and that side of it. So our happy new homeowners, 434 of them on the sold side. And then our months of inventory went down a little bit. It was 2.5 down to 2.4. So we're still in that seller's market. Like I said, we're still in a tight market. That inventory is tightening up a little bit. Because you see that we had less houses come on the market. We had more houses go off the market in that side there. So, but what does that all mean to you guys from the buyer's standpoint of it? Obviously, demand's still active. So obviously the houses are moving in that side. And then ultimately, the good homes are moving quick. They're not going to stay on the market very long. The ones that are going there are moving. So obviously preparation obviously is the key to anything. Being prepared, like I talk a lot about is, having a spring training. If you're thinking about buying a house, getting in touch with us, getting a game plan put together so that you're not just, swinging blind for all intents and purposes. Know exactly what you're doing and why you are doing it. And that's what we try to do here so that you're comfortable in that buying process. On the seller side, obviously our inventory is tight. Pricing, still drives those results. It's, our goal is to net you the most amount of, that's what a lot of agents say, net you the most amount of money. Well, that's great, but how are you going to net the most amount of money if you're not netting the most amount of potential buyers looking at your home? So that's why pricing is huge, is making sure you're pricing that house so that the largest pool of buyers is going to see it, in turn drive that, interest and action from those buyers. So in buyer demand, obviously still holding up like we saw just based off the numbers. Obviously we talked about having a scouting report is ultimately really important. So ultimately when we're buying a house, we got to talk to Russ here with what's going on in the mortgage world. I know Russ has been kind of traveling around a little bit, so he's back in the saddle again with us. So Russ, what do we got going on the mortgage side?
It's all about energy prices and inflation. We've seen both the wholesale and resale inflation numbers come in well above expectations in recent months. This really wasn't a surprise. We all know that things cost more at the pump, and that trickles down to hit everybody. At the same time, we're still seeing the jobs market strong. Jobs numbers have been beating forecasts and expectations, and all those things point to concern about inflation. And we have even heard rumblings as of late that maybe the new Fed governor, who took his position late last week that he may have a rate hike on the horizon. Whether that happens in 2026 is kind of hard to say. But even entities like the Mortgage Bankers Association have changed their forecast, and they are now projecting that we could see rates move up in 2027. Having said that, rates are currently sitting somewhere around where they were about a year and a half ago, but they're still very strong. And as we've talked about this many times, Mark, if jobs continue strong and people are making money, people earning income, that likely means they want to buy a house. That means more folks enter the market to buy homes. As you've been seeing, inventories are still pretty good, pretty low. And that puts upward
Yeah.
pressure on home prices. So if you're waiting for rates to go down, you may wait for a long time. It's hard to say. There's no guarantee of that, but it's hard to say. But given that we have a shortage of inventory and we have a lot of demand out there, it's quite likely you may pay more for the house if you're waiting than if you bought today. So mortgage rates, in a nutshell, though, have been kind of moving up and down just a little bit. We're sitting at like a year and a half, 2 year highs right now, and we may be here for a little while.
Yeah, exactly. I mean, I think the biggest thing we talk about here is preparation and coaching, you know, and be prepared of what's going on and just have that education so you go out and make an educated decision. So if you want to customize game plan, give us a holler here. You can comment on any of our platforms that we're kind of sending this video out on. Happy to help you. Numbers down here, 672-7670. That's my personal number. Shoot me a text, give me a call. Happy to go over anything with you. And then obviously you can reach out to Russ over there at 290-8936. So awesome. Well, I appreciate everybody jumping in with us. Try to keep it short and sweet. And we'll be back.